Hi everyone, welcome to Introduction to Range Bars. So this is part 2 of it. Right, so I'll just wait for about 1 to 2 more minutes for more people to stream in before we get the session started. For those of you guys who are here with us right now, right, a very warm welcome. So as always, if you guys have any questions with regards to range bars or even just doing technical analysis in general, do put them under the questions chat. Okay, so we'll just give it about a few more minutes for more people to join us. And I have the questions chat open as well, right? So if you guys have any questions, feel free to put them under the tab. So let me just bring this up. Okay, so for those of you guys who are here with us, right, welcome to Introduction to Range Bars. So for today, it will be an educational series. So we do have webinars on a daily basis, right? So on Wednesdays, we are doing more live sessions. And on Thursdays, there are more educational series. And on Fridays, we will be doing another live session. And towards the end of every month, on Wednesdays and Fridays, we do have a price action masterclass. So you can check out the schedule on vantagemarkets.com, right? So maybe let me just hop onto this and show you guys, right? So just go to vantagemarkets.com and you should be able to see the schedules as well as the sessions there. Okay, so when you're on the website, just click on Education and Tools, Educational Webinars. And you can see this upcoming webinar. So this is the schedule for the week, as well as the speakers. You can also take a look at the previous recordings. So if there are any sessions that you would like to review, right, you can take a look at them here. Okay, so let's get the session started. So I'm Lee Sing. I provide FX advisory to institutional clients. I'm also part of the team that's recognized by the technical analysts as finalists for the best FX research. If you guys have any questions, right, feel free to put them under the questions chat. I do have the Q&A box open. If not, if you're watching a recording, feel free to reach out to me on LinkedIn as well. So just a quick disclaimer before we get the session started. The information presented here is not to be treated as investment advice. It's solely for educational purposes only. So this is the agenda that we will be going through for today, right? So first we will start off with identifying the different benefits of using range bars. And we will move on to looking at range bars and trending and ranging markets. And finally, looking at how we can combine range bars with horizontal support and resistance levels, as well as indicators or even trend lines. So this will be the flow for today. So let's first take a look at the different benefits of range bar trading. So I would say in general, the most commonly used chart would probably be Japanese candlestick patterns. So just a quick recap from where we left off at part 1. The main difference between Japanese candlestick patterns as well as range bars is that range bars are independent of time. So how range bars are being constructed is that the user would specify a specific range that they would want before the next bar would be printed. So if you take a look at Japanese candlestick, the difference is that if you have, for example, an hourly chart, right? So it shows the open, high, low, and close prices in a candlestick. And in the next hour, it would print another candlestick with the open, high, low, close data. But for range bar itself, right, if you specify, let's say 10 pips, it means that price has to move above or below that 10 pips range in order for a new bar to be printed. So that's the main difference. right? So because of this, the way range bars are being constructed, right, it eliminates noise because a new bar is only printed after you have a price range being specified and price actually moved beyond that range. So this shows that it reflects actual price parameters, right? So unlike your Japanese candlestick patterns, where we see that there is a time interval, right? Range bars itself is independent of time. So you don't have a time component in it. So in this case, right, when you have range bars being printed, it shows just price itself, right? So the movement of volatility in price. And once price exceeds this specific range specified, right, it creates a new bar. So take this example. So I gave an example on 10 pips, right? You can also use this example here where you have a 20 tick range bar. So essentially only when you have a price movement that is beyond this range, either below or above the high and low of this range, right? Then it will print a new bar. So by doing this, it helps us to filter out price movements, right? It helps us to filter out noise as well. So small movements that are within this range would not trigger a new bar being formed. So because of the way range bars are being constructed, you can see that it's based purely on price movements. So when you have more bars, essentially it represents higher period of volatility. And this also shows, right? So apart from just looking at volatility, by taking a look at the number of bars, if you see consolidation or rather areas where prices are interacting with multiple times, what this shows you is that this zones itself, right? These are areas where we have basically number of buyers and sellers looking at these zones once price reaches these areas, right? So you're seeing a lot of activities going on there. So this is another benefit of range bars, and it helps to eliminate noise and highlight volatility. Okay, I have a question, right? So where can I watch past video? I missed part 1, right? Not to worry. Okay, so Doris, you can actually watch it here. So let me just open this, right? So let me just clear this drawings, right? So just go to vantagemarkets.com and then let me just clear this drawing so that we are able to get a clearer view of this. Okay, so just go to vantagemarkets.com. This is the website. Okay, so you can just Google vantagemarkets.com under education and tools, under educational webinars. So once you click on this, right, just scroll to the bottom, you can see this previous recordings. So they're all posted on YouTube. You can see this is the first part, right, introduction to range bar. So you can just click on this. It should bring you to a YouTube channel here. So yeah, you can take a look at them here. Okay, so for those of you guys who want to watch the sessions, you can take a look at them. Okay, so back to our range bars. So this is an example of a range bar. You can see the picture on the right? So this is how range bars look like. So you can see here, right? So essentially when you have 3 consecutive or 2 consecutive bars, you can see that it represents strong upward movement, right? Or strong buying pressure here, especially when you have this consecutive bars, because for this bars to be formed, right, assuming that you specify a 20 tick bar, what this shows is that you can see that price essentially has to move above. Oops, sorry. Let me just pause this. Right. For those of you guys who are here with us, a very warm welcome. I'll just wait for about 1 to 2 more. Okay, and yeah, back to our PowerPoint slides. So yeah, so in this case, you can see that essentially, so in order for price to move beyond or for a new bar to be created, you need price to exceed basically this 20 tick. So if you have a range that's specified 20 tick, right, you need price to move beyond this 20 tick range before a new bar can be formed. So by doing this, it helps to filter out most of the noise, right? So small price movements would not create a new bar, and it helps to highlight volatility as well. So periods of high volatility. So you can see here, right, it helps, apart from just volatility, it helps you to take a look at the buying and selling pressure. So when you have 3 consecutive green bars that are being formed, right, this represents strong buying pressure. Whereas if you take a look at this moves here, right, so let me just highlight this example. So take a look at these 2 bars. Here, you can see that there is basically buying pressure and pushing price above a specified range, creating this new green bar. But the next one that we have over here, what this shows you is that you have sellers coming into the market. So price pushed and closed beyond the range that is specified by the user, but you can see that it followed with selling pressure to push price lower. So represented by this area, so you can see that there are sellers coming into the market here. So essentially, this buying pressure cannot be sustained. So these are a few insights that you can take away from trading range bars. Right, so apart from just this, let's now take a look at how we can actually look at range bars in the different markets. So we have markets that can be categorized by either trending or ranging markets. So the way to think about this is that for trending markets itself, right, so what you can see with range bars is that you can identify whether prices are in a trending or ranging markets. So the first thing with range bars is that you can take a look at the consolidation in price. So over here, right, you can see in this case, right, this represents a strong trend, right, strong upward trend. And it's also represented here with this bullish green bars, right? So it shows that you have a lot of buyers coming in and it's able to push prices higher beyond a significant range so that these new bars are being created here. So this is one, right? Whereas in ranging markets, you can see that you have this tug of war between buyers and sellers, right? So price pushed higher, but it's met with selling pressure over here. So these are areas of consolidation. And usually in areas of consolidation, this is when we will see the next big movement. So usually if you take a look at Japanese candlestick patterns, right, you can see that there is consolidation. It can be in the form of, for example, a falling wedge before a break to the upside to signal more upside potential. So in a range bar, you're able to view this, right? So you can see consolidation over here and periods where there is strong buying pressure, for example, represented by this whole moves. So looking at range bar, it helps you to identify trending and ranging markets, right? So for those of you guys who are not familiar with these terms, right? So in a trending market, essentially, if you take a look at a chart, right? You can take a look at it in terms of the line chart or Japanese candlestick chart, or just load any chart in general, right? Different forms of chart. What you can see here is that generally in the trending market, you would see a clear direction, either prices moving upwards or prices moving downwards. So if you take a look at it in terms of the structure of the market, right? So if you just open up any chart, for example, right? Let me just bring out a chart so that we're able to see this clearer. And again, let me clear all the drawings. Right, so take a look at this example that we have here. So you can see that in this example, right? So what you can do in identifying whether prices are in an uptrend or downtrend, take a look at the overall direction. You can see that prices are moving higher. Another way to do it is to just mark out the highs and lows. So even if you're in a range bar or if you're in a candlestick bar or even line chart, right? Just mark out the highs and lows. You can see that in an uptrend, what we want to see is that prices are forming successive higher lows and higher highs. You can see that each high, right? Each consecutive successive high is actually higher than its previous high. And likewise for these are the highs. So this highs, you can see that this high that's being formed is higher than the previous one. And then again, the high that's being formed over here is higher than its previous high. And same thing for the lows, right? So this is an uptrend. In a downtrend, it's the other way. You can see that you will have, for example, something like that. So let me just draw this out. So you can see that again, if you have to mark out the highs and lows, so here. So in this case, you can see that you have successive lower lows and lower highs that are being formed, right? So in a downtrend, you have lower lows and lower highs being formed. In an uptrend, you have higher highs and higher lows being formed. If you're in a trending market, sideways, right, ranging markets, you can see that prices move sideways. It tends to support or respect both the support and resistance levels. Okay, so by just looking at the range bars, you will be able to identify whether prices are in a trending or ranging market. So this one, it's looking more at market structure. So trending ranging markets, right? So range bar itself would only show when there's sufficient volatility, right? So this is the good thing about range bars. It helps you to filter out small price movements, as we've discussed earlier. So when you have this strong bullish green bars that are being formed, it represents strong buying pressure, right? Buyers basically coming in and pushing prices to a significant move enough to create the next bar. So it's not just one small, maybe like a small movement before price continue to the downside, but rather this movement itself is significant and it's beyond the specified range. So let's say if you put your range bar to be 10 pips, it means that price has to move either above or beyond, right, the 10 pips of the high. So it has to be above 10 pips above this high or below this low in order for a new bar to be formed. Okay, so it's the understanding of that, right? So range bar helps us to filter out for volatility, and in general, you want to trade when there's sufficient volatility. So when there is enough buyers and sellers in the market, because this would then affect the spread as well, right? So when there's enough volatility, enough movement in the market, right, it helps us to get more opportunities. That's one. And also in a more liquid market, so when you have enough buyers and sellers in the market, generally prices, there are more volume, right, that's being transacted. So at each price, you have basically buyers and sellers coming in. So naturally, that would also reduce the spread. So spread is basically the difference between the buy and ask price, right? So bid and ask price. So you can see that in instruments that are heavily traded, so take a look at, for example, euro dollar, right? That's one of the most heavily traded currencies. You can see that they generally have smaller spreads as compared to maybe the more exotic currencies. Okay, and then we talk about trending markets as well. So trending and ranging markets and the main difference between them. This has to do with market structure. So in an uptrend, you see that prices form successive higher lows and higher highs, as we saw in the chart earlier. In a ranging market, prices move sideways, right? So you can see that in this case, usually price would respect a support and resistance level, right? So it tends to bounce in between. So there are a few ways you can trade ranging market. One way it's to trade basically selling at resistance levels and buying at support levels. That's one way, right? So essentially trading within this range. Another way to do it would be to trade and wait for a breakout of this range. So personally, I would prefer this method more, because what happens is that when price comes into this level, what generally it does is that it entices and sellers. So in a resistance level, entices sellers to enter the market, and you have stop losses slightly above these levels. So when you have this stop losses lying slightly above or below the support resistance levels, these are areas of liquidity. So imagine if you are a big player, right, wanting to take sell orders here. So let's say I'll draw a new one, right? So let's say the support resistance levels. So essentially you have a lot of orders lying here in terms of either sell stops, right? So essentially people who are playing a breakout trade and they do not want to wait for a break and close below the support level, they will put sell stops below. Or you have buyers that are coming in to buy, right? So they place buy orders over here, and essentially their stop losses, which are also sell orders, are placed below. And then likewise, right, if at a resistance level, you have sellers coming in to sell, they would put their stop losses, which are essentially buy orders, or people who want to play the breakout. So if they do not want to wait for her break and close above, they would place their buy stops here. So essentially waiting for price to break above it, and then they enter a buy order. Okay, so what this shows over here, right, is that you can see over here, you have a lot of orders basically just lying slightly above and below these ranges. So you can see here, right? So this three lines there are basically these orders, right? A lot of orders, or you can, some people use the term liquidity, right? Lines just slightly above these areas. So imagine if you're a big player coming in and you want to take sell orders, right? You want to enter sell positions. You need to find these areas where there are essentially high number of buyers or sellers, right, who are willing to transact at a certain price. Because if you're going to sell with such a huge volume, right, if price enters into this zone and before entering into this area of liquidity, right, you sell with a big volume, you end up pushing prices much lower, right? And in the process of it, you get very bad price. So you get very bad fills. So what usually happens is that they will try to push price into these areas of liquidity, right? Essentially these areas where you have a huge volume of sellers, or rather a huge volume of buyers, right? So if you're selling, you want a huge volume of buyers who are willing to take that price from you. And in that process, right, it doesn't push price much lower, especially if you have a huge volume. Okay, so these are areas of liquidity to consider, which is why if you're trading in the range, right, it's best to wait for a break or a close above or below this range before taking the trade. So in a ranging market, this is something to consider. And also we want to combine with other indicators. So apart from just looking at resistance and support levels, you can also take a look at indicators. So in this example, I will be taking a look at the moving average, right? So exponential moving average, right? These are all trend following indicators. They're just different type of moving averages. So EMA itself represents exponential moving average. So essentially it gives more weight to the more recent price. Whereas for a moving average, it gives equal weight. So if you specify 20 periods, right, you'll just take the data from 20, let's say 20 periods, and just average it. So when prices are holding above this trend following indicators, right, it could signal more upside, and you can take it as a bullish signal as well. So there are a few ways you can explore this, right? And let's take a look at the next slide. Okay, so if you guys have any questions as well, please put them under the chat. Let me just clear the drawings. Okay, and then the next thing that we want to look at for range bars, we want to look at how we can combine them with support and resistance levels. So for those of you guys who are not familiar with it, right, I'll just do a brief introduction of support and resistance levels and the different types of support and resistance that we can watch out for. And then moving on, we will hop onto the chart and see how we can apply this to the range bars. So let's take a look at support levels first, right? So I'm sure this term is thrown around, especially when you first started learning technical analysis. So you hear people talk about support resistance levels all the time, right? Especially you just starting out. So in this case, you can see that support levels essentially, right? Even though we call them support levels, but they're more of zones, right? So essentially these are areas where price finds support. So these are areas where you can see a strong downward movement, right? And then coming into this zone, what usually happens is that you can see that price would see a sharp reversal here. So it's a significant reversal, right? Not the small kind where you see this just a slight bounce before it continues to the downside. In this case, what we want to see ideally is a significant move up. So what this shows us is that at this specific price area that we have over here, you have enough buyers that are coming in to push prices higher. And at the same time, you have a lack of sellers who are willing to sell at this price. So then this becomes a psychology level, because when price comes back into this area, right, people who missed out on the first move, they can enter the market, right? And you can see that price could continue higher. This is also a case where you can see bullish chart patterns being formed, right? So especially in a downtrend, right, on this reversal and a break of this last resistance or the last high, right, it can also form the double bottom. Okay, so we will lift this to the chart patterns, but that's the general idea, right? So this would be the types of support levels. Generally, this is the first kind. The other type of support level that we have would be one that price phase. So this would be a price ceiling, right? So you can see that coming into this specific area, again, this zone that we have over here, we are facing selling pressure. So price pushing prices much lower before you can see that price entering into this region again, and you have a lack of sellers who are willing to sell at this specific price. Price continue higher, right? So this would be linked to a breakout as well. So if you are taking any breakouts, you want to wait for a break above a key zone, a break and close above it, and a retest of it. So in this case, you can see that this was the previous resistance turn support level. Okay, so we will hop on to the chart later to find this specific example. So just remember the different types or different structures of support and resistance levels first, and we will hop on to them. So these are the two kinds. So for resistance, it's the other way, right? You want to see significant reversal or significant rejection of a zone. So essentially prices climbing higher and coming to this specific price zone. You want to see prices push lower, right? So this shows that you have enough sellers coming in to push prices lower and a lack of buyers who are willing to hold at this price. So this is the first kind, and the other kind that we have would be support levels that we have over here, where you have buyers coming in to buy to push price higher before a lack of buyers, and right now it then tested as a resistance. So these are the two types of resistance levels. Okay, so before I move on to the third point, right, I will just hop onto the chart and we will show this two examples. And I have another question as well, right? Can you demo this range bar chart concept to the current level of gold spot to see if it's consolidation or resistance for incoming sell to push it down? Thank you so much. You're welcome, Chong. Right, so let me take a look at gold and we can see if there are any examples on this. So let me just clear this chart. Clear all these drawings as well. So let's take a look at gold. Okay, so I'm on the range bar, right? So this is 1,000 range, right? So this should represent 100 pips. Okay, so in this case, you can see here, right? So let's take a look at the structure first, right? So on gold, right? So maybe before I hop on to answer your question, Chong, right? Let me just highlight the different types of support resistance levels first that we have went through earlier, right? So recall the two types of support level. The first kind that we have would be something like that. So essentially you see this, right? So double bottom formation as well. So you see this level, right? So for the first time price came into it, you saw the sharp rejection here, representing that there's buyers coming into this range. We might not have caught the first bounce, right? So in this case, you can see that this bounce itself might not have been the first. We might not have gotten signals for this, but excuse me, coming into this region again, right? So the support level here, right? So once this is established, what this shows you is that when price comes into this region, you can see that there are these areas that price interacted with. You can see here once, and then again here as well. So you can see these two zones. So following the first low that's being formed, you can see price interacted with this zone again here. and again over here. So there's two zones, right? And then the break of the neckline, it forms your double bottom formation as well for more confirmation to the upside. So this is the first kind that we have where we saw the significant reversal. The second kind of support level, right, like I mentioned, is this one here. So you can see that these are resistance and support levels. So you see over here, right, essentially we have this sharp rejection. You saw sellers coming in to push prices lower. And then following that, there's a break and close above this level and a retest of it again as a support. So you can see this very clearly over here, right? So this was the resistance level. And then following which you can see a gap above it and price broke above this level and now retested again as a support before it continued to the upside, right? So even if I were to remove all these drawings and just draw a horizontal line across, this is the resistance. You can see this area over here. So again, right, we don't want to take it at a specific level, but rather we want to identify zones, right? So for those of you guys who attend the live analysis session, you can see that generally I work with zones. So when price enters into the region, I use the smaller time frame for confirmation. So this is on gold, right? So the different types of support level, you saw this too, right? So the first one that we have is this example that we saw over here, the rejection. The second kind is one where it became a resistance and price broke above it. So we saw a resistance turn support level. Now the next example I want to find would be using a resistance level. So you can see that this is an example of a resistance level here. So if I were to zoom in, you can see that this is an example of a resistance level. So again, the first time price pushed up here, you can see this sharp rejection. Right, so this is the first time over here. Might not have caught this move, but you can see that coming into this zone, right? Again, we have these two rejections here. So this would be an example again, right? So a sharp reversal once, and then again over here. So what this shows you is that coming into these areas, you have basically sellers who are willing to push or come into the market to push price lower. At the same time, a lack of buyers. So this would be the first type of resistance level we have, one that we saw a sharp reversal here. The second kind that we have would be one that is a resistance turn support level. So take this, support turn resistance level. So this is a good example. You can see this range here. So you can see how price interacted with this zone, right? So price coming in, you saw that rejection before it continued to the upside. Again, over here, where we saw a strong push down and a rejection. Again, this area over here before price breaks and close below this region. And then coming into this region, you saw that once price broke below, right? There's a break below this area, it retested as a resistance before it continued to the downside. So this is the second type of resistance I was talking about, right? So essentially you saw this price coming in to test it as a support level over here, and then essentially failing it and retesting it again as a resistance. Okay, so I hope that this is clear in terms of looking at the different types of support and resistance levels, right? So we saw the different types of support resistance levels and we saw how it can be applied on the range bar charts. Okay, so let's take a look at the Trong's request, right? So to see if it's a consolidation or resistance for incoming sell to push it down. So let's take a look at this. So let's take a look at the current price, right? Let me just remove all these drawings. So currently, this is the range. So you can see that just looking at this area itself, the resistance level that we have, right, graphical or horizontal level that we have over here would be this high. You can see this high, right? So again, applying the same concept, you can see that price came into this region. We saw this rejection once, right? You saw this sharp rejection. We might not have caught this first move, right? Because we wouldn't have known. But coming into this area, you can see that this is a resistance level. Price came in, and you can see that it respected this area as well. And and coming into this region, right? So if you were to highlight this resistance zone that we have over here, this area, right? Essentially, you can see the way the bars are being formed. So we have price pushing in. So again, recall when you have this bullish bars, this green bullish bars, right? Consecutive ones being formed. What this shows you is that the strong buying pressure coming into this area, right? So with this consecutive bullish bars, because for this bullish bars to be formed, price has to move beyond a specific range. So once price moves into this area, right, essentially it's met with selling pressure. So price failed to close above this, right? So there is a move beyond the previous high of this bar, but you can see that it could not sustain the buying pressure and there is a rejection here. So price closed lower and right now a new bar is being formed. So just looking at the range bars itself, you can see that it's testing a resistance area right now, this zone where we saw the sharp rejection. And looking at how we have this selling pressure coming in, right? So a number of sellers that are coming into, or rather not number of sellers, but enough selling pressure to come in to push price lower, right? So you can see this area. You can see that at this resistance area, essentially we saw price and it's being met with selling pressure. So another thing I would like to highlight for range bars is that because of the way it's being formed, you can see that these are very neat and good to draw trend lines. So if you just take a look at this, right? So for range bars, you can see in general, unlike Japanese candlestick patterns where you have the different time frames, right? Different time frames you can see. So generally when I draw when I draw trend lines on Japanese candlestick charts, I do not cut the body of the candles. So you're able to cut the wicks of it, but don't cut the body of the candles. But for range bars, right, because it's a specified range, you can see that in this case, trend lines are much clearer. So you can see in this case, right, what we have on gold, prices are met with a resistance level. You have selling pressure coming in, represented by this, and significant enough that it forms a bearish range bar, which means that price moves beyond this range, right? And then you have prices at this time, right? It's still holding above this trend line. So I would say that if we were to, if we want a confirmation on this, right? I want to see a break below this trend line, this ascending trend line. Currently, you see that prices are still respecting this area here. So this is one to consider, right? EMA, this is the EMA. So EMA represents exponential moving average. It gives weight to most recent price. So in this case, generally for EMA, right, I would use 20. So this is just a personal preference, right? You can back test it across different currencies and see which is the one that captures the reversal nicely. Okay, so yeah, so this is for EMA. So I would say that for a confirmation on gold, right, ideally wait for a break below this ascending trend line. Okay, so I hope that answers your question, Trong. Okay, and then we move on to the third point where we talk about range bars and how it represents higher volatility. So in general, when you have more range bars being formed, essentially it shows that there's more activity going on at this specific price range. One more thing to note about this is that if you take a look at range bars, right? So let me bring back the chart. You can see these areas, right? So range bars help you to identify specific zones where prices, we saw a lot of hesitation here. So if you take a look at this move, right, you can see, for example, this area here. You saw how these bars are formed, right? And they don't seem to have a clear direction. So prices are pushing higher, right, with significant moves, which forms these bars, but it's also met with selling pressure. So this means that there is enough volatility in the market, but at the same time, right, it can't seem to determine a clear direction. So you can see at these areas, right, these areas over here, these areas where price tend to spend or interact multiple times with, right? So these areas themselves can serve as key zones, right? So in terms of support resistance levels for us to watch as well. Okay, so just something else to keep in mind. So the range bars represent different volatility, right? So you can see usually when price consolidate, we see a strong thrust in the trend direction. So we talk about trend lines as well and how trend lines and range bars can clearly show the trend. So this example where we saw earlier, you can see here, right? So because the range bars are based on specified price range. So for example, like 100 pips or 10 pips, right? So unlike candlestick patterns where if you switch it across different time frames, you can see that on the smaller time frames or on the, if you draw your trend lines on the higher time frame, or on the smaller time frame, you could see that this trend line might not hold. So you don't get that issue with range bars. So trend lines can be useful on range bars, right? It helps in terms of looking at the trend, and you can use them as confirmations as well. So in this uptrend, for example, if gold is met with a resistance, right, the confirmation comes when price breaks below this ascending trend line. And if a bearish range bar is formed, it shows that this move itself is significant enough to create this bar. So the range you can specify them on trading view. So right now I'm on trading view. So these are the different ranges, right? So 100 range, it's 10 pips. 1000 range is 100 pips. Right, so if you're not very familiar with it, right, what you can also do is just, so take an example, right? So just let's say pound dollar, right? So you can just look at the range. So when you specify the range, right, each the movement in each bar, or rather the range in each bar would be the same, they're of equal range. So you can see this range, right? So the high, if I hover around this, let me just turn on the high and low prices. right? So if I hover around this one, any one of the bars, for example, right, just focus on the top left corner. You can see the O, right? So O means open. So generally, if you want to look at a range, we look at the open and in this case, it will be the low. So this, in this case, right, you can see that this is the open. The open price is at 1.21234. The low is at 1.20856. And the high, it's at 1.21856. So essentially from 1.20856 to 1.21856, that's 100 pips, right? So when I load it to 1000 R, essentially what this shows is that each movement itself is 100 pips. Okay. Yeah, so we also talk about indicators, right? Apart from just looking at trend lines, you can also use indicators, right? So in a trending market, you want to use trend indicators. So for example, moving average, right? So this is the most common or most popular trend following indicator. So as the name suggests, because it's a trend following indicator, it works well in trending markets. So how do we identify trending markets, right? Take a look at the range, right? So if prices are moving sideways, if there are no clear higher lows or higher highs being formed, in this case, you can see that there is a very clear movement over here. So prices are in an uptrend, right? So in a ranging market, it will be something like that, right? Where you can see that there isn't a clear high and low, right? Prices are just moving sideways, respecting both the support and resistance levels. Oops. Sorry for that. Let me just go back to this. Yeah, so this is an example of how we can combine range bars with support and resistance levels. So when you load a range bar, right, this is an example on pound dollar, I believe, right? So essentially what we do here, right, having load the range bars on TradingView, you can take a look at the different levels. So this is on the daily chart, right? So once you have load the chart, what you want to do next is to just identify the horizontal levels. So in this example, I've marked out all the horizontal levels where we saw significant price action. So in this case, you can see that I've marked out this level. So all these levels that are marked out over here, right? You can see that these areas themselves, right? These areas where we saw significant price interaction, right? So price came in and you can see that there are multiple bars that interacted with this zone. And then again over here, so they're basically clear movements. You can see this is a support level before price failed it and we tested this level as a resistance and we saw a break above it and a close and price continued to the upside. So this is one. And the next thing that we want to identify it. So this itself, right, it's something that you can consider adding to your analysis, basically using the idea of round numbers. So generally for big institutions, they like to look at numbers that end with 20, 50s, or 80s, right? So this is my bad. I should have round this off to 50s. But in general, right, this would be zones that you can look at. So the first thing I would do is first identify these levels. First, just looking at the chart. Look at how price interact with the specific levels. Having identified these levels, you can round it up to either 20s, 50s, or 80s. So just something to consider adding to your analysis. So you can see these regions, right? Essentially when price comes into this area, right? These areas are being respected as both support resistance levels. Currently on pound dollar, you can see the prices are testing this zone and it's also holding above a trend line. So maybe let's just take a look at the pound dollar chart right here. Let me just clear these drawings again. Okay, so if you take a look at the chart right now, right, we're on 100 pips range on pound dollar. You can see that essentially this area, right, so prices are testing this area. So we've marked out this zone. So this is the first one at 1.220. Right, so this is the first range. And the next range that we have, it's at this area itself. So again, just using this round numbers. And the next one that we have would be this zone here. So these are just areas to watch, right? You can mark this if you're at 76 and you want to mark this at 1.180, right? So this zone. So essentially you can see here, right? So this is one area. So when price breaks below, you can see represented by this range bar here, right? So we see this significant enough bearish move to push and break below the first support area. So when price breaks below the support area, it becomes a resistance zone and you have this zone as the next target. So this is one way you can consider for range bars. One thing to note is that prices are also holding below the 20 EMA, right? So 20 EMA, it's the 20 exponential moving average, right? So when prices are holding below this moving averages, usually it gives us a bearish signal. If it's holding above, then it's a bullish signal. So this is another way you can consider analyzing with range bars. Okay, so you can see that price also broke this ascending trend line. So this area that we have here, so you saw how price tested this region, right? And price broke and closed, broke below this level, and it's also holding below the EMA. So these are ways that you can combine support resistance levels, right? We're not doing specific analysis for this session, but the idea is to understand a bit more on range bars and see how we can take a look at them in our analysis and ways we can use them. Okay, so I hope that this session is clearer on range bars and ways we can use them. So in summary, right, we talk about the different benefits of trading range bars. So essentially the idea is that it helps to eliminate noise and also highlight areas of volatility. When you have a number of bars, right, that are being formed or that are consolidating at a specific price zone, then it shows that at this specific price point, essentially you have enough buyers and sellers to sustain the activity. Then we also talk about range bars in trending and ranging markets, right? So in an uptrend, a downtrend, we talk about market structure and how we can identify the different trends. So in an uptrend, you see successive higher lows and higher highs being formed. In a downtrend, it's vice versa, right? Lower lows and lower highs, and then a ranging market. So ways you can trade them in an uptrend, right? You want to trade in the direction of the trend. So in an uptrend, we want to look for pullback to buy, right? So when range bars consolidate, you see these areas where prices where you have a huge number, different numbers of range bars that are moving in this supposedly small area, right? Respecting both the support and resistance levels, they can act as demand and supply areas. So that's one way, right? So trading in the direction of the trend in a ranging market, if prices are respecting both the support and resistance, we want to wait for a breakout, right? Either a break above the resistance or a break below the support, right? Before trading, taking any trades. And then finally, we talk about range bars and how we can combine them with support and resistance levels. So we talk about horizontal support and resistance levels as with the example that we saw on pound dollar, and also the use of trend lines on range bars, right? So range bars are specified range. So because of that, you don't have the issue with Japanese candlestick patterns, where if you draw a trend line and you switch it across the different time frames, you see the trend line act differently across different time frames. So one that might not cut the higher time frame, right? If you switch it to the lower time frame, you can see that it could have cut the body of the candles, for example. So you don't get that with range bars, right? So trend lines are clear on range bars. We also talk about moving average as an indicator, right? And how moving average is a trend following indicator. So that's something that you can use in the analysis as well, especially if prices are in an uptrend. So first is the market structure, looking at higher lows and higher highs being formed. Once that is being formed, you can draw your trend lines if there's any supporting this, the analysis, and also indicators like moving average to support the trend, right? So moving averages are trend following indicators. So it's important that you apply them in a trending market. Okay, so with that, I think we have come to the end of the session, right? So, and I see that we have no other questions as well. Okay, so if you guys want to check out the schedule of our sessions, right, just go to vantagemarkets.com here, right? Go to vantagemarkets.com under webinars, right? Education and tools, educational webinars. You'll get to see the speakers as well as topics that are being presented. On Wednesdays and Fridays, we have our live trading session. So for this, we will hop onto the chart, look at the setups. We will also be doing a review of the calls that we'll meet earlier. And on Thursdays, it's our educational series. Okay, you're very welcome, Michael. Okay, so I hope that you guys enjoyed the session. For tomorrow, we will be doing a review of the setups as well as charts to look out for, right, for the coming week. Okay, if you want to look at a recording, right, you can also find them here. Here, right? So upcoming webinars, you can take a look at the recordings. They're all posted on YouTube. Okay, so with that, we have come to the end of the session. Thanks everyone for being here with us throughout the session, right? It's great having you guys, and thanks for keeping the session interactive as well, right? So we would love to keep the session interactive. Come in with your questions, right? So for tomorrow as well. Okay, so with that, we've come to the end of the session. Thank you, everyone. Stay safe and take care.